Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about both Visa and Mastercard, and I'll let you guys know which one I prefer between the two. Now, I have not made a stock spotlight style video in quite some time, so if you guys do enjoy this type of content, it would definitely mean a lot if you could subscribe to the channel. I'm on my way to 2K. Before we get started, let's take a look at my portfolio dashboard. In total, I have invested $30,000 so far into this portfolio specifically, and my portfolio value is sitting at $43,393, which gives me an unrealized gain of $13,384 or a total return of 44.6%. Now, in total, I have earned $1,284 of dividend income, and my yearly projected income going forward is $738 with a portfolio yield of 1.7%. And as usual, I have been getting some questions about my portfolio yield. People have been saying that it is quite low for a dividend investor, and that's because I am mostly focused on total return. I like dividend income as an aspect of my total return, but it's not the most important attribute for me within a company. In my opinion, the most important thing within a dividend paying stock is that it's able to continue growing its dividend at a fast rate. For example, companies like United Health and Mastercard are growing the dividend at very fast rates, and over time, it's going to be very good for the investors. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So with that being said, I think we can first just jump into my portfolio holdings section, and afterwards we'll go into seeking alpha and look at the financial metrics. But right here, we can see both Mastercard and Visa, and it's because I want to compare the two. Now, I'm not going to go into too many details. I still want to keep this video pretty brief. If you guys want more information on Mastercard or Visa, definitely go into their investor section of their websites. It's very helpful. Now, put simply, these companies are both payment processors. Basically, every time you make a payment with a debit or credit card that's Visa or Mastercard branded, they help make that payment happen. Now, in return, they do take a small percentage of that transaction as a transaction fee, and that's how they make the majority of their income. Now, Visa and Mastercard basically share a duopoly. They are the largest credit card processors in the US, and of course there's other competition from both Capital One, Discover, and American Express, but Visa and Mastercard have much larger networks. Now, because of this, they have historically faced a lot of regulatory heat, especially in terms of antitrust lawsuits, and they have had to pay out a lot in fines. Now, I don't think that it's completely fair to put the heat only on them. Yes, they take a portion of every transaction. They have a lot of pricing power because of how many people like to use their credit cards and of course their debit cards as well. But the banks are also taking big portions out of every fee, as well as any of those machines that you use in order to make the payment itself. Although both these companies are very likely to continue facing antitrust lawsuits, I do think that in the future they will continue performing well because of their dominant market position. Now, between the two, both companies are very good performers. Mastercard has actually performed a little bit better than Visa, which we'll take a look at later. But what you can see right here is my average price paid for Mastercard is $318 and my average price paid for Visa is $214. That's because I recently bought another share of Visa, pushing my cost basis up. Now, unfortunately, I only own a very small position in both companies, 1 share of Mastercard and 3 shares of Visa, but that's because at the time buying 1 share of Mastercard and 2 shares of Visa was very expensive for me. Now, of course, in hindsight, I wish I would have bought more because both these companies are fantastic, and if I had to choose between one or the other, I'd actually choose Visa, even though I think Mastercard has a good chance of outperforming going into the future. Now, the main reason for me choosing Visa over Mastercard is because I think it's more predictable, but of course, I'll be buying these companies based on their prices. The reason I did buy Visa recently was because it dipped in stock price pretty significantly, whereas Mastercard stayed at the same stock price for the most part, so it made sense to buy the discount on Visa. However, if Mastercard stock does tank, I will be putting my money into Mastercard, so I would go back and forth between the companies depending on the current valuation and price. Now, the reason I do think Mastercard could outperform is because it is the smaller network compared to Visa, and I think it has a lot more room for growth. Also, they've been growing very quickly outside the US and international markets. So coming down here, we can see my change, which is just how much I've gained in unrealized gains in each of these positions. So it's 197 for Mastercard and 215 for Visa. And we can see that the percent change or the total return is 62% for Mastercard and 33% for Visa. Now, one thing to keep in mind is that this is not an exact comparison because, like I said, I did buy another share of Visa pretty recently, which would have pushed my cost basis up and brought my total return down. However, I did do the math, and even looking at my cheapest position, which was a 192 buy-in for Visa, the total return would be about 45%, whereas this is still significantly higher for Mastercard regardless. Now, in terms of dividend, both pay a pretty pitiful dividend in terms of yield itself at 0.52% for Mastercard and 0.73% for Visa, but their dividend growth rates is where they really shine, which we'll see on Seeking Alpha. My yield on cost is a little bit higher at 0.83% and 0.97% respectively, and that's because price appreciation has outpaced dividend increases. Now, in terms of allocation, about 1.2% of my entire portfolio is in Mastercard and 2% in Visa, so it's not too bad. They make about 3% of my portfolio in total, but I'd be happy having that around a 5 to 6% position combined. So I think now would be a good time to hop into Seeking Alpha, and if you guys are enjoying this comparison video so far, let me know down in the comments below, and also leave a like if you haven't already. It helps me out with the YouTube algorithm a ton. So the current price sits at $510.62, and the year-to-date performance is fantastic at 19.72%. In the past year, MasterCard is up 31.97%. Now comparing that to Visa, we can see that Visa has not had as good of a year at 8.78% year-to-date so far, and in the past 1 year, it's up 20.7%. Now just to show you about where I purchased that last share, is about $255 when it dipped down here, and I was looking forward to it dipping further and I would have bought some more shares, but unfortunately it started going up, which is good of course in the long run, but in the short term I prefer lower prices so I can accumulate a larger position. Now MasterCard has barely had any dips. Even here where it slowed down a little bit, it was not a significant drop and the prices basically kept shooting straight up. In the past 5 years, MasterCard is up 90%. In the past 10 years, it's up 513%, which well outperforms the S&P 500. Now in the past 5 years, Visa is a little bit behind at 60.77%. In the past 10 years, it's still behind, but it's up pretty significantly at 372%, which is still fantastic performance. Now just keep in mind that just because something is at its 52-week high or close to its 52-week high does not necessarily mean that it's overvalued, and just because something is near its 52-week low does not mean it is undervalued. Now hopping into financials, I'll keep this brief because both have very similar financial performance, but the revenue basically is continuing to increase over time aside from a slight dip in 2019, and the same will be set for Visa, which we'll take a look at after. Now in terms of their per share metrics, it's the same thing here. Revenue per share is going up, basic earnings per share are going up, and the weighted shares outstanding are actually going down, which is good because they're doing share repurchases. Now the last thing to take a look at here is free cash flow, and the reason for that is because dividends tend to be paid directly out of free cash flow, so growing free cash flow keeps those dividend healthy and it keeps that payout ratio low. Now we can see right here of course that their free cash flow per share growth is fantastic and is expected to do well in the future as well. Now looking at Visa, you might be getting deja vu because it's basically identical, a small dip in 2019 but continuing to increase otherwise. And their per share metrics tell a pretty similar story with revenue increasing consistently and the same for earnings per share. Now their basic weighted shares outstanding are also going down over time. That's because Visa is also doing share repurchases just like MasterCard. Now in terms of free cash flow per share, there is a pretty significant dip in 2019, but aside from that, it's been growing quickly, and I hope that it continues to grow this quickly in the future so we can see those big dividend increases. Now speaking of dividend increases, both of these companies are fantastic when it comes to that. They're both very well known for it, and it's why a lot of investors tend to hold these stocks in their portfolios. MasterCard has a dividend growth history of 13 years with an almost 15% 5-year growth rate sitting at 14.87%, which puts most companies to shame. Their payout ratio sits well below 50% at 18.93%, and their dividend yield is low at 0.51%, but their dividend yield on cost is actually pretty high. Now to show you what I mean by that, we can look at their yield on cost chart here, and if we put their 10-year metrics, if you would have bought this company 10 years ago, your yield on cost would be at 3.14%, which is significantly higher than what the current yield is sitting at. That's because yield on cost is calculated based on your initial purchase price, and it compares the current yield to that purchase price. Now, as you would expect, Visa has stellar performance in terms of dividend growth, and it has a 15-year history of consecutive dividend increases. Now, if they continue increasing their dividend each year for the next 10 years, which I'm pretty confident that they'll be able to do, they'll be a dividend aristocrat, which is great. Their 5-year growth rate is at 15.77%, and their pay ratio is a little bit higher than MasterCard's currently, but by barely just a little bit at 21.51%, with a dividend yield that is also a little bit higher than MasterCard's. Now in terms of yield on cost, you can see a similar picture here. It's much higher than their current dividend yield, of course, and it's actually higher than MasterCard's at 3.45%, which means that they have grown their dividend at a quicker rate than MasterCard in the past 10 years. Now both companies trade at relatively high valuations, with MasterCard trading at a higher valuation than Visa by quite a bit. The current price to earnings ratio for MasterCard is at 38.14, and the forward-looking price to earnings ratio is at 35.83. Now this is a non-GAAP metrics. If you look at their GAAP metrics here, it's even a little bit higher than that. Now not quite as high. Visa's price to earnings ratio is at 29.34 and 28.61 for their non-GAAP metrics, and for their GAAP metrics it's very close at 30 and 29.3. Now compared to MasterCard, the price to earnings ratio here is a little bit more reasonable, but of course there's different metrics that are taken into account in order to consider what the price to earnings ratio of a company could fairly be valued at. For MasterCard, investors might be willing to pay a premium because they expect the company to grow faster than Visa, and they also might be expecting more predictability from MasterCard compared to Visa. Now in general, just because a price to earnings ratio is high does not mean the company is overvalued. Both these companies do deserve to have a bit of a premium valuation to them, and that's up to your own judgment to decide whether you're willing to pay a 29 price to earnings ratio for Visa or a 38 price to earnings ratio for MasterCard. For full transparency, I'm not planning on buying any more Visa at these current prices, and the same can be said for Mastercard, but if there's a significant dip, I'll be buying some more shares of both companies. Now, if that does happen, I probably will make a video on it just to update my stance on the companies and their share price. Both companies have very consistent and fast revenue growth. We can see for Mastercard here, their year-over-year revenue growth is at 11.87, and their forward-looking growth is expected to be at 12.15%, which is very strong. Now for Visa, the revenue growth is lower, which like I explained before could be a reason for the lower price to earnings ratio. It's expected to have 9.7% year-over-year revenue growth with a forward-looking growth of 10.38%, which is still very strong. Now lastly, in terms of profitability, these companies are very similar. Their gross profit margins are very high. Mastercard's basically at 100 according to Seeking Alpha, but if we look down here, we can see their net income margin is at 46.45, which is very good. Visa, on the other hand, has a gross profit margin of 97.8%, but a better net income margin at 54.72%. These companies are so profitable that they're able to return a lot of value back to shareholders in the form of buybacks and dividends, which is why I like to hold both in my portfolio. Now, as you can probably see by now, these companies are very similar and sometimes indistinguishable from each other in terms of financial performance. Before I do end this video, I just want to make it clear my point about both these companies. I think they're both very similar, and I think you should buy the one that you prefer to hold the most. Now, like I mentioned before, I personally prefer Visa over Mastercard by just a little bit, but I will be buying these companies based on their current share price at the time I purchased them. What I mean by this is that if I find that Visa is trading at a discount compared to Mastercard, I'll probably be purchasing Visa stock, and if I find that Mastercard is trading at a discount compared to Visa, I'll be purchasing Mastercard instead. Let me know down below whether you prefer Visa or Mastercard, or if like me, you hold both in your portfolio regardless. As always, that does bring us to the end of today's video. I really hope you guys enjoyed seeing this look into both Visa and Mastercard and both the similarities and differences between the two companies. I wanted to make sure this video remained pretty brief, so if you guys have any more questions about the companies, let me know down in the comments below. If you want a more extended version of this video, like a deeper dive into each company, let me know down below as well, and I can put that out in the future. If you did enjoy the video and you haven't yet subscribed to the channel, please do so. I post weekly investing content. If you haven't yet watched my last video where I talked about every single holding within my portfolio, check it out right here. And if you want to see my video before that where I talk about the SCHD stock split and how to fix your spreadsheet, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.